How to find better forex levels using this guide. Don't ignore the higher time frame. That can help you find trades just like these ones. The higher the time frame, the more impactful the level could be. I personally use a blend of the weekly, daily and H4 charts to find key levels. Now let's go to the charts and let me help you improve your trading skills. Now, I'm going to take like a 3-step process when applying levels to the charts, and that's just basically the time frames that I'm going to use. I'm going to go from the weekly, daily, and then I'm going to go to the hourly chart. And something that I also do as well is kind of round up my figures to match either the whole, quarter, half numbers. So we're going to do that as well in this video, and I think this is a good way, especially if you are new to trading. This is a really good way to find levels in the market. So you can go further and go a little bit more advanced. You can go and check out some of the volume profile stuff that we've done on the videos before, but I think if you are just new and you're looking to improve your trading for 2024, you can start here. So let's go on the weekly chart first. We have Euro US dollar in front of us here, and you can see that the market has created some highs and lows, and this is the first thing that we want to point out. Now, the way I like to build up my sort of levels is by using a blend of the horizontal ray tool and some rectangles, okay? Because no level is just a level, okay? They're always zones, because the market is not perfect. It's not always going to go to these levels to the pip and then reverse, but it's good practice to put them in. So you can see here there's a high here at sort of 112 area, 112.50. So I'm just going to leave that there for a second. I'll come back and review them after. But what I'm really going to do is just spot recent highs and lows, especially on this weekly time frame. So I can see here around about this 1.1 level, there was an area where the market has turned for a couple of weeks. So that is very significant in the market. I can see that we turned down towards this 1.0750 level, and I can see that we've turned around about this 1.0500. So that is the kind of first area of interest in the market. So the next area, I'm just going to double click on these now, and what I want to do is just refine those down. Okay, so I just want to add them to either a half number or a quarter number or a whole number, anything that's sort of closest. So for this example here, I'm going to put 1.1250, and that's going to be rounded up. For this one here is 1.1. We're going to go down to this low here at 1.0750 as well, and then we're going to go down to this low at 1.0504. Now it doesn't matter the colors of these, the thickness of the lines, it really doesn't matter. For a visual point of view, when I'm doing videos for you guys, I like to just put the support as blue and resistance as red. It's just so that if somebody's quickly viewing the chart, they can see that that's support and resistance. But we know that if price is above the level, it's support. If price is below it, it's resistance. Then just like to use the rectangle tool. So the rectangle tool for me is where I like to find the sort of high or the candle wick and the bodies of the candlestick. Okay, so for instance, for this high in here, I'm going to highlight this zone between that wick high and that candle body. For this area here, I'm going to go from the wick down to the candle body, move that over. For this here, go from that candle body to the wick in there, and then the same down this area here. Now, that basically just gives me a better idea of the zone that I'm working with. Now, we are going to refine these now. So then sort of second step is to do the exact same thing, but on a daily time frame, okay? So we can see the market on the weekly, for instance, on these highs, is that it's included all of this area. I can definitely refine this because the market came up into that 1.1 handle. So I'm going to refine it down into these highs in here and that wick high. Don't need to refine this one down here. I'm comfortable leaving that the same down through this area as well, because it kind of includes sort of inverse head and shoulders pattern. If we go take a look at this one up here, we might be able to refine it a little bit more just by using that candle wick in there. And the reason why I'm doing that is because a lot of the times the market comes into these extreme levels and reacts. Now, the reasoning behind that largely is the fact that at this area here, the market has turned from buyers to sellers quite aggressively. We know that it's quite aggressive because of the time frame that we're on and the movement within the market. Okay, we fell from 1.1 down to 1.0750. Okay, that's like a 250 pip move to the downside. If you just grab this measuring tool here and go like that, you can see it's around about 250 pips. Okay, so that is a significant move in the market, right? Especially if you go into things like looking at daily ranges and things like that, but we're not going to get into that into this particular video. But you can see how the market moved away from here. Now, the reason why I like to highlight that level is because what if price comes back to that point? Does the market react again? We don't know if it's going to, okay? We don't have a crystal ball, but we know that obviously aggressive sellers got in here before. Can we see if the same thing happens again? While price came in, it rejected. So that there to me is a trading opportunity, okay? But we're going to do the same thing now. We're going to look to see if any of the weekly and daily levels can be improved. The only thing I would kind of want to highlight, I quite like the idea of highlighting this area in here as well. The reason why I like highlighting that is, again, we've got aggressive selling coming in. I could include this wick as well, but that kind of comes in under that 1-spot-1 handle for me. So looking left, I can see that above that level, the only other area I can see is this one as well. Now, like I said, you could go deeper into this. You could add things like volume profile. If I just put one on there just to show you an example of what we looked at very recently in a lot of our market breakdowns, is we looked at this 1-spot-1 level because it was also a high volume area as well. So just to kind of add that in there, you can go and look at volume profiles just to add further confluence to the levels. Next step is to go down to the 4-hour time frame. The reason why I like using 4-hour time frame levels as well is because it kind of gives me a little bit of a midpoint, a midterm sort of area to look at. Okay, so I can see, for instance, that the market has obviously found some support in and around this area, and we've had aggressive buying coming in. So I would highlight this sort of zone in here as a potential area for the market to come in and find some support. Okay, so that would be also an intermediate area. So let's say, for instance, as an example, you can see that the market is kind of finding a bit of resistance here at the moment. Okay, low volume above that area. Okay, so if the market was to find significant resistance there, the next place that I would expect the market to come to, for one, is that low. Okay, because buyers came back in. After that, it's this zone down through here, around about that 1-spot-0 as well. So if you want to add in a horizontal ray tool to that, you can do that. Okay, there's nothing wrong with adding things to your chart as long as they don't complicate things and as long as it makes sense for you. At the end of the day, you are the person making the decision, so it's got to make sense for you and your trading. Okay, now we could go a little bit deeper, but those are the 3 steps that I particularly use when I'm trying to find better levels in the forex markets. Now, if you want to go deeper, you can do that. I can go to the hourly here, for instance, and we can say that, let's say, you know, from that analysis, we can see the price came into the daily and weekly level at 1.1. We've had a very strong bearish reaction. Maybe you're now bearish on this particular market, so you want to find those areas of resistance. I could come into this area here and say that is a minor level of resistance. The reason I know that is because we've had lots of bearish moves to the downside. That was a pausing point in the market. I can also see it visually here and here again. Okay, so the one thing I'd be looking for if I was particularly bearish, I'm not going to be technically trading around this time of year, but if the market does find resistance here and breaks to the downside, that could be a good area to look for opportunities down to this swing low. And then if price takes out all these lows, we've got a pocket of low volume here and the market could go down to 1-spot-0 But that is an example of how you can find better levels in the forex markets using this 3-step method, using 3 time frame method, I should say, really. And it can help you become a better forex trader in the new year. If you want to see me do a more detailed analysis on advanced levels, like using low volume areas and maybe even trading ranges in a bit more depth, hit that like button. Lets me know that you like the content. Have a great new year and I'll see you soon.